This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Monday, and we should have another very interesting week. You know, basically markets around the world have been pressured for multiple weeks, almost months. We've been in downtrends everywhere you look, below every moving average, from the momentum moving averages, which is the 8 and the 21 day, to below the 200-day moving average for, almost a month, which tells you that, you do have real weakness here. So we've been trying to trade these markets, navigate them both long and short. So when you come in, you want to see what's going on pretty much around the world. So first, if you start overseas, there's more pressure in Europe. The whole Volkswagen story just keeps going, and rightly so, considering I think one out of 7 employees or workers in Europe work for some kind of car maker. So you're seeing a lot of collateral damage. So anyway, looking at the HEDJ, if you go to the chart, you'll see, to start the year, you had a really nice uptrend above the 8 and 21 day, and then basically this is when that broke. So you had about 4 months of this being a tailwind. And then since then, it's pretty much been trapped, by a descending channel. Then here's when it took out the 200 day. So now you fast forward to where we are now. Last week, it did seem as if maybe there was a small double bottom here, okay, and that was Thursday into Friday. At this point, it's down. I think the DAX is down 1.5%. So, if you're measuring it, see if this could hold. Okay, the low here is 54.08, and if it doesn't hold, this is your really big level. Volatility typically spikes when you make lower lows, and right here for the HEDJ, that right now is closer to 54. So not exactly in the problem spot. I'm sorry, that low is 52.60-ish. Okay. So, we've been watching that pretty much every morning. A few weeks ago or a month ago, the volatility was coming out of China and the Shanghai. At this point, Asia's mixed. Some areas are closed there. The Nikkei is off a bit. That's already broken as well. We've been talking about avoiding that multiple months ago. And, the Shanghai is up small, but it still hasn't made a lower in a while. So, that basically hasn't been as loud or much of a noise vacuum as we've seen there for a while, but they did have more economic numbers showing that they are slowing, and they can't hide that anymore. As far as our markets, you look at the SPX, which is the futures cash, and we all know how it broke this channel in August, okay, giving you lots of clues to get out of the way. That started when this inside range broke to the downside below all the moving averages. Look how long ago we broke the 200-day. This was over a month ago that we broke the 200-day and haven't even rallied back to it, showing you need risk off and you need to be tactical, which is what we've been doing on the VTF. But anyway, you go to this lower range, you had your wedge that resolved real quickly to the upside into the Fed that did not raise rates, and that's what caused this topping tail. And since that topping tail, we've come all the way lower. So we start the week with a pretty nasty reversal on Friday into a lower high, which came in right around here. So your resistance for the week to start is 1952, and here we are at some lower support. So you have Friday's low at 1921 to write down, and then that Thursday low, which we actually bought against, at 1908. So 1908 to 1921 is important right here. So the longer we stay below 1950 for the next session or so, there's a chance that we could take this out. And then, I'm not sure if you heard, but everyone on TV and everyone around is saying that we must test this 1867, which you can't rule out. But in order to do so, we're going to have to break and close below this level. and stay below this resistance. So at this point, we'll see what kind of action we have today. You do have the S&P futures down about 10, 12 handles, a little bit off the lows. On Friday, what pretty much led the market lower were the bios. The bios were a really strong sector. We showed many different examples on how the momentum broke to get out of the way, maybe get short. And then anyway, on Friday, you had another move lower. Remember last week we talked about this ascending channel that broke to the downside with potency. That's your signal to get out of the way or get short. After that, rally back to retest what's it called, old support that turns into resistance. Okay, then it never even took back any of that move, and then boom, lower. Okay, and it was the first to go red on Friday and continued to the downside. So for today, I think what's going to be really important is this 304.56. It's a little bit above it. Can the market push below it, give you a move lower, and then create some kind of red dog reversal around this for a trade, or push below it, not be able to get back above it, and then at some point test this flash little crash low from August 24th. So I think watching the bios here are going to be very important. Okay, you also have a small resistance right here, which is a little bit closer to 320. So if the bios stay below 320, chances are it still could be a little bit of a volatile scenario there. If it gets back above it, maybe some pressure gets relieved. So watch that 304.56 pivot. That's what I'll be watching, in the first hour of the day to see if there's any kind of opportunities. Tech, which also has been a bright spot, well, not also because there's not that many bright spots, was down 1% on Friday, in sympathy with the bios, while the S&P was, off small and the Dow was still holding up. So you want to see what happens with the Qs today. The Qs had a pretty nasty candle. Okay, look at the size of this wide range candle, and you now have a decent support floor here. So in order for the market to get some weakness, this is going to have to break and close below 102.28. So watch that as your pivot, 102.28. And if that's the case, you have a few points of reference below. You have one right here, okay, and then you have another one down here. So for the bears to get any traction, they need to break this. On Friday, it opened above the prior high, and one of my rules, which you should write down, is if you open above a prior high and can't hold it, you get out of the way, especially if had some longs overnight. I know I took some longs Thursday into Friday, sold some strength, and then had some stops. Hopefully you did the same. Anyway, you look here at this pattern also. This was your pretty much ascending channel. Here was your topping tail into Fed put off versus lift off, and now we're sitting in this zone, and the question is, does it come into here or hold there? And that's the levels to watch. On Thursday of last week, you did have Yellen speak, and she tried to be a tiny bit more hawkish, so that gave some strength to the banks that have been battered and bruised. So for today, you want to see, do the banks go green first and get any traction to the upside? And if they do, it'll be also hard, again, for the bears to get traction to the downside. So, you look at the XLF, and, they have been very weak, because the Fed did not do, its liftoff. Here is in one important level, and then here is the gap from Friday. This gap was never filled on Friday. So that did show you the banks had some relative strength. So you want to see if it remains. So I would write down the XLF 2270. See if 2270 holds. If it holds and goes sideways and protects this gap, it's going to be hard for the market to get some traction to the downside to retest those lows. If you want to look at a few different stocks there, that have been broken, see Goldman Sachs, see if it could hold Friday's low. Friday's low is 178. If it holds above that, maybe there's a small chance that it acts a little bit better for a trade below there. Then you get out of the way. On Friday, I tried being long JP Morgan. Probably could have stayed long it, but I got flat on not in anything today. I'm going to be trying to figure out opportunities. But here you go with JP Morgan. It did reverse on Thursday, gave you some follow through on Friday. And now you want to see if it holds above this level. This level for JP Morgan is 60.87. If you could hold above that and go sideways, maybe some momentum stays here. If it fills the gap and loses the traction there, then you avoid it again. These banks have been very wishy-washy. Same thing, Bank of America, one last one. It too has been broken, but gave you a day-and-a-half trade, held the bottom end of the range on Thursday, gave you a gap up on Friday. Day-and-a-half moves are what have been working in this market, not much more. Now you want to see if this gap holds also. This is a 1581. See if it holds. If it holds, maybe at some point, the banks get a little bit better, but it's still not clear if the Fed's going to act at all. You have like 13 Fed speakers talking this week, so I'm sure there's going to be a lot of back and forth rhetoric. But the bottom line is they didn't raise rates on that Thursday, which was what the market wanted, and now, we still are on the defense mode. So as far as individual stocks, you had a lot of nasty candles on Friday. A lot of stocks that were trying to act well opened up into the Friday strength and went back below Thursday's high and gave you big engulfing gross candles. So I'm going to get into that in a second. First, I want to get into Apple. Apple's been trying to act better. It should have results maybe as I'm speaking. Right now I think it's 7:45. At some point they're going to talk about their weekend sales. I don't have an edge here. My gut tells me anytime you do like a 5 to a 5S or a 6 to a 6S, it's not blockbuster. A blockbuster, they wait for a 7 or so. And to me, I know I have the 6 and I love it. But no one I think is going to go from a 6 to a 6S. Maybe if they still have a 5 or a 4, there you go. So we'll see. See what type of numbers they come out with, and that'll dictate some action in Apple and tech. This has been trying to act better. I was in it on Friday. I actually got stopped out. This has been very tight, holding in well. We'll see if that continues. If the numbers aren't great, watch 114.02. And then the 21-day, it's been pretty much hugging it for the past week and a half, and that comes in a little bit lower, or you could give it more room to 111.87. You can't get too bearish on Apple if it holds this just a 112 area. But it's not like you've been able to buy strength either. And then here's your 200-day, which is big-time resistance. If for some reason it's blockbuster weekend sales, then if it gets above 116.70, I'm sure that will help the market and especially help tech. Because there's not that many things in tech that look so great, and they try and hold up and then changes just like that. That's what happens in a weak tape. Amazon, gross candle. Some guys probably made some money short there on Friday. It opened up. At least you had some follow through from Thursday's candle into that open up, but look what happened here. Couldn't hold the prior high, closed near the lows, and pretty bearish candle. If you were long, you should have got out, and now you have this small little trend into this moving average. So I'd say watch this 518 area. Also write down Friday's low. That never hurts, 521.40. So from the where it opened up on Friday to the low is down $5 pre-market. Maybe it goes red to green for a trade, but just be careful, that it doesn't break this trend. If it does, you could see more pressure there. Look how fast this time that when it looked like it was holding up and then pow. I'm not saying that's the environment we're in right now, but first wide range, red bar there. Same thing for Google. Google actually was the weakest one on Friday. Before I got on my flight to Atlanta, it was down $2-3, and everyone was like, why is Google so weak? Who knew? But all in all, couldn't hold above the prior high, went red first, closed below the low. That's an outside session for you that could lead to lower prices, and next support comes down at 625. There is a void here, so write down Friday's low of 639.85. Use that as your pivot. If you can't reclaim that, you do have a void down to that spot. This was another topping tail into resistance, and these descending channels have been controlling any bounces, even in the strongest stocks. Sometimes it pushes through for half a day, and then they tend to have failed. Same thing goes for Netflix. Netflix gave us some decent trades last week. It showed some relative strength on that Thursday. We had the red dog reversal the week before, but all in all, it's just a trade, and you could trade it both ways. Last time, we had a little spot on it. It was this relative strength on Thursday, and then opened up and couldn't hold above the prior high. It didn't fall apart like some of the other names, so look at it today, see if it goes from red to green first. Here's important support. This was your red dog reversal there, but all in all, still, not getting much traction to the upside, but either is the market. So, it's worth noting and watching. This one's been a better trader lately, and there is some liquidity here and there, and it does move. So, it is on the top of my radar. I'm just coming in flat, and maybe from red to green, and if it takes back 101.57, that would be better for it. If it doesn't, avoid. Tesla, which has also been acting well, had its first, shot across the bow on Friday, where it opened up and, closed in the lows and gave you a pretty ugly candle. So you just want to make sure, if that happens, that it doesn't lead to much more. This was when, you had your nice calculated trade above this little trend line, and then boom, bit of an outside day. Opened up, traded below the prior high here of 263. That could have been your sell setup when it went red, your next one, and now you just want to make sure that this holds. If this doesn't hold and you're still long it, get out of the way. this red candle might have even given some traders, the green light to get short there. And now I'm sure it's opening down a little bit. So you do have Friday's low at 256.15, and then all the moving averages, which they've been above for a while, coming right here. So 253 is a spot. So, again, if the market's going to get any strength today, you want to see if a name like Tesla can go green. If it can't, you better take some caution. In social, best in breed has been Facebook, but that also had a pretty nasty engulfing candle if you were long this thing. Haven't seen a candle like this in a while, since right here almost. Here is a big engulfing candle. You haven't seen that in the last 2 weeks. So that, for me, I was long it and I got stopped out. Okay, I'll revisit. And now you want to make sure from a complexion standpoint that this 21-day holds right here. If it doesn't, it could definitely take a discount fast or lose momentum. This 92 area is important. A close below this, and your next spot could be 90, and then who knows, even lower than that. So at this point, see what the bears do with Facebook. They haven't been able to do much. It's been one of the strongest names out there, but this wide range bar sometimes leads to more. So make sure you know where support is and what you're in. If you're still in it, where your stops are, or if you're looking to be shorted, where potentially you add and make sure it stays below. Twitter's been a broken name and tried again and just failed. A lot of guys are trying this here and there and taking it tactically on 5-minute charts, but it hasn't amounted to much. Here was your last little tight pattern here where it looked like maybe it could continue to the upside, and it failed again. So not very compelling. LinkedIn's not very compelling either, just small trades. It too gave you a tactical move, if you traded it from here, but then this was your last wide range bar, almost a false breakout there, and now I'm not seeing much here. I don't think many people are trading this anyway. It's been broken, it's below all moving averages. Maybe we revisit a little closer to earnings. As far as commodities, oil still hasn't attempted to make a lower low, so the volatility hasn't been as extreme there. I know Goldman says $20. They said it like 2 times in the past 2 weeks. If you look at the USO, though, still in this channel, but we all know that they want to wear people out in channels. The last time oil had a move off the lows, it was in this channel here, and then finally broke to the downside. So if you want to use that as an example, this was your move off the lows. Here it got tight once it went back below this 19-ish on the USO, boom, and then it came and trended down. So here's where we were about 2 weeks ago, engulfing move. 3 up days was actually a tradable move for some bulls. And now if you look at it, it's still tight, going sideways. So until oil breaks below 42, in the regular oil, with the USO here at 1420, it's going to be pretty much don't do too much here, not much action. If it were to get above this 15.25, that might squeeze some shorts because a lot of people are playing it for lower lows and it hasn't happened yet. And if it gets below this, then here is that low. So keep watching it in this channel. It has to move below it in order for people to start crying crying deflation, saying that the oil companies are going to their debt is going to get pressured, et cetera, but right now still it's not like the obsession point until either we get above that area or below that area, but it's good to know where it is. And, in the last 2 weeks, some people were pointing out the strength in gold. Gold had a pretty decent move, for itself. It's been broken for so long. And it did. Sometimes moves get reignited on a gap up that doesn't get filled, and that happened right here. And now you do have this 2-day gap that looked like it was holding, and it's filling it this morning. So if the GLDs want to keep any momentum whatsoever, you would think this 108.50 holds. It probably shouldn't have filled this gap if it was going to be strong anyway. So anyway, at this point, still also controlled by this downtrend below the 200-day, but there are some things to do. TLTs, just to close it up, very choppy in here. This is a mess. Your last clean move happened when it traded above. Hold on, let me get my little pencil above this spot. But then that was your big outside day, saying that move was over. And since then, it's been a choppy mess. I guess if you're looking at it from a support stance, here's 121. I don't think there's much to do in there. A lot of the movement seems to have been priced in. So we enter this week. It's Monday. Futures are off lows. I'm not exactly sure where they are this second, maybe down 10, 11 handles. We know where the market's obsession, the 2 basic narratives out there is that China is slowing and no one knows what's going to happen with the Fed, and now you have this whole thing with Congress, with Boehner leaving. So those are the headlines you're going to hear. You're also going to hear that we need to retest the lows of August, which technically that typically happens, but it doesn't have to happen when you want it to happen. So there have been times when shorts have been caught. We've been getting these day-and-a-half moves that have been tradable. What a trader wants is to close strong, open up. Typically, that's a day-and-a-half move where you can make some money with momentum, or close weak, open down, and make money that way. Not close strong, open down, close weak, open up. That choppy mess and the misdirection is what happened the first 7 months of the year. So we're getting a little bit more continuity. You have your price points from last week with the spiders. We know that the pivot low from Friday in the IBB, what's going on there. As far as the banks, maybe a small chance that they could show some relative strength after Yellen on Thursday. So you know where to look, how to measure it. I would continue to be tactical, continue to take trades. Be careful. I know a lot of traders got very hurt Friday trying to just cost average into the IBBs during that down move. That's the type of scenario that could put you out of business. When you're in a tape that's on the defensive, you never know what's going to happen, so you want to do a level versus a level. And yes, that could chop you up a bit, but it's better than putting you out of business with a gusher that you didn't expect. So make sure to tune into the radio, tune into the chat. I will be on the recap after 4 o'clock. I wish you luck, and I'll see you soon. Have a good day.